5 seconds to the open.
You ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you on the podcast today. Wow, what a week we have already had so far in this stock market and financial markets. Wow. I mean, it's quite astonishing to see the ups and downs, the gyrations in prices that we have seen over the last several days. I mean, just think about it. Anywhere from oil, which has just been in total free fall. Crude oil has been collapsing. Then you also have cryptocurrency prices, which have also been getting hit hard. Stock prices, which have been wobbling because there's been so much in the way of kind of diametrically opposed information. I mean, you have some information coming out suggesting that there's bullish news ahead, but then you also have some of the hard economic data, which is not confirming some of that bullish sentiment. So it has just been a wild ride. Want to welcome everybody again to the podcast, but also especially for our members who have been trading in this. We've received several emails over the last week or so of many of you making quite a bit of money by trading the markets in this environment. When you get movement like this in the markets, seismic movement, you can make money. And in fact, I was just want to point out one of our members, Renee, who had just tweeted it just a few, maybe about a day or two ago, who had said that previously, before she had joined Follow the Money as a member, she was scared of this kind of environment. When she would see this kind of environment, it would spook her. But now, because she understands the power of trading and she knows different asset types that she can use, different ETFs that she can use to make money even in a declining market, she said she feels great. She's excited about the movement in the market. And I think that's indicative of many of our members. As they come into our membership, they understand that, you don't have to be afraid of a declining market. You don't have to be greedy in an uptrending market. I mean, you really can make money in any kind of environment whenever you are a trend trader. And we're going to have a lot more to say about that on an upcoming podcast. And by the way, I don't want to spill the beans here because we have a really big surprise for all of our Platinum members coming in 2019. But for those of you who are interested in starting a part-time trend trading business, we have a lot of information coming for you. So exciting information for those of you wanting to start a business and actually trend trading as that business. Yeah, we got some really exciting stuff. So that's coming up. We'll be talking more about that on some future podcasts as well. But today, on today's podcast, we're going to kind of dismantle some of what's been happening in the market and in the economy. And we're going to be joined by my good friend, Tom Cloud. He is a precious metals advisor. He's been in the business for over 40 years. His insights are invaluable. I mean, having been through so many cycles that he has been through, seeing different economies, different economic cycles, seeing different presidents, I mean, all of the information and experience he has is, I think, vital in a time like this. So we're happy to tap Tom and have him on the broadcast today. He's in the bullpen, just about ready to come on. Before we bring him on, I want to make an announcement, an exciting announcement for the winner of our Platinum membership. Remember last week we told you to text the word giving, and we were going to give away a 1-year membership. Well, we closed the giveaway, and we went ahead and selected a winner at random. And the winner I want to announce is Andrew from the Bronx, New York. And we actually had an opportunity to call him this morning and let him know that he was the winner, and he was excited. He was very, very excited about the new membership. So, Andrew, we want to thank you for being a part of our giveaway, you up there in Bronx, New York. And we want you to know that you now have a 1-year, 12-month membership to our highest level, the Platinum membership. It's a $1,000 value. Thank you for being a part of it. And, of course, that's our way of giving to our listeners. So in this season of giving. So if you happen to miss last week's podcast, I encourage you to go back and listen to it. We talked about the topic of giving, such an important topic. And Andrew, congratulations for winning a 1-year Platinum membership here at followthemoney.com. All right, so let's go ahead and dive into our podcast today. Today we're really taking a look at just what's happening in the economy. If you look at the latest November Federal Reserve minutes release, when you look at it, it reveals that while the Fed is still planning on another near-term rate hike, very likely coming up December 18th and 19th at its scheduled meeting, it is expressing less certainty overall about maintaining the aggressive pace of hikes into 2019. Now, the minutes release comes on the heels of a statement this week by last week, by Fed Chair Jerome Powell, that current U.S. interest levels were, quote, just below the Fed's neutral rate. Now, that is a stark departure from Mr. Powell's statement just a few months ago in early October that U.S. interest rate levels were a, quote, long way from neutral. So this new dovish tone that's being put out by the Fed, it seems to bode well for the bulls who are seeking to push this market back up to new record high levels after weeks of hefty price volatility. But as we saw earlier this week, the markets really imploded on Tuesday. We saw the Dow Jones Industrial Average tumble more than 3%, about 800 points on Tuesday. Also, the S&P 500 also fell more than 3%, as well as the NASDAQ also falling sharply. The Russell 2000 was down 4.4%. So, we had a hammering of a selling day on Tuesday. And, of course, the markets are closed on Wednesday in observation of the memorial for President George H.W. Bush, who's being laid to rest, the funeral. But what does this mean as the market reopens back up? What are we supposed to expect here? What's actually happening? Well, there was also some other news that kind of went south, and that was the U.S.-China deal, the trade deal, seems to be coming together. We've been hearing rumors about this swirling in Washington now for some time. Washington and Beijing apparently have agreed to temporarily pause the escalation of their ongoing trade war for a period of about 3 months in an attempt to reach a lasting bilateral agreement. As you well know, there has been some pretty bad blood between Washington and Beijing. They have been kind of tit for tat with the trade war that they have going on. And that news of some sort of a pause or a temporary pause of this trade war, was positive for near-term demand, both for U.S. farm products and also U.S. energy products, because China did say that it was going to boost, as a result of this meeting, it was going to boost agricultural imports. So we would expect to see some higher prices in ETFs like the agricultural ETF, ticker symbol DBA, also the commodities ETF, ticker symbol DBC, energy stocks, which have been beat down with a bloody pulp. Except for natural gas, which we called a new uptrend on a while back. In fact, we called a new uptrend on natural gas back in October, very beginning of October 5th. And since that time, UNG, which is the ETF we use to track natural gas, it's an imperfect ETF for sure, no doubt about it. But it's a good metric anyway, or a good way to track the price of natural gas. That one's up about 40%. Since our new uptrend alert back in October, at the very beginning of the year, we called it at about $26. It's currently sitting at about $36 now. But aside from natural gas, energy prices have been in a really tight spot. And so we would expect to see some, slight improvement there because of this deal. But then this week we had some conflicting news about the deal. The Chinese were not really talking too much about the deal. Trump was talking a lot about it, but there seemed to be some confusion about what was actually happening. So I think the market is just really confused as to what's going on, and it's not surprising to see the market selling off here. We already had lost our position uptrend in the S&P 500, and the long-term trend in this market, which began way back in 2009, still remains intact. we still have a nice long-term uptrend. The wind is at our back on the long-term chart, but in the near term, things are getting a little weaker. So with all that being said, on the other side of this break, we're going to bring Tom Cloud onto the program and ask him what's happening as we see not just the stock market having a tough time, but also finally starting to see gold prices shake off some of the sideways grind that they've been in and starting to perk up, actually forming a new position uptrend. We'll see if it can maintain that as we move into the rest of the week. But we're curious if gold can really get its mojo back here, because we have violated a very key area on the resistance area on gold. So we're watching that. On the other side of this break, we'll be back with is our good friend Tom Cloud, bringing him back on the podcast today in the flesh. Normally you hear him live on our YouTube page, where he does a live update every single Wednesday, providing you with information on what's happening in the gold and silver markets. And Tom, it's great to have you on the podcast today. Thank you so much for joining us.
Jerry, it's always great to be on with your listeners, some of my favorite clients.
Well, it's great to have you. I know they always look forward to your updates. And as we were talking before you came on the podcast, we've been talking about what's been happening with the Federal Reserve, recently blinking, suddenly talking about how interest rate levels are now just below the Fed's neutral level, which is big change in language. And then we also have the United States and China talking about a potential trade deal, which seemed to put some upward impetus upon stocks. We started to see a kind of a catalyst there for maybe another bullish run in stocks. But going into the close on Tuesday this week, we saw stocks really get hit. About halfway through the day, we start to see stocks crater, and U.S. stocks really took it in the nose. But what I noticed, Tom, was something very interesting, was that as we were watching stocks fall, for the first time in a while, we saw gold really wake up, and it pierced through a key area of 1238, which has been the resistance that we've been telling our members about for some time. We've been saying until gold breaks through 1238, it might languish in this sideways grind for some more time. We saw it happen. We saw it pierce above the 1238 resistance price level on higher than normal volume, and those who understand what that means knows that means that people are buying. So people are buying gold, Tom, in this environment when we saw stocks selling off. Is this just a blip? What's going on? Why are people buying gold here?
Well, there's several reasons, Jerry. Certainly, I'll start with the ETFs. We saw yesterday a huge surge in the ETF buying as we money managers I talk about, the few money managers in the country that get it and understand that you have a diversified portfolio are now moving into gold. We saw a big jump in that yesterday as far as the amount of money that poured in. Number two, we're seeing the central banks just really loading up on gold. They look at gold as the future problem solver, is the only investment in the world that trades in all 27 world markets and is valued anywhere in the world, whether you're in the jungle somewhere or whether you're in the Hong Kong, some of the biggest cities in the world. People know gold is valuable. But central banks have to keep loading up on it because they know any future problems are going to be settled, whether there's resets that we hear about. We can't quote or say yes or no, especially Russia and China. Our central banks are buying gold every month at astonishing tonnage. And so we're seeing that go up. And then we're seeing some of the classic inversion in bonds are near inversion. So that's another thing that we hear, as you do, Jerry. We follow when you see, say a 3-month bond selling at almost the exact rate as a 2-year bond. It certainly historically is not good for the stock market within a 12-month period, but is tremendous for gold. So your listeners and our listeners need to keep watching this, and they'll be able to follow it on your network. But when these interest rates invert, it pay down some of theirs as money's liquid. So when you see the Fed saying they want to cut their balance sheet down, it's really a joke. It's really going up. They just take some notes and pay them off and, buy other maturities. But it is important that we keep an eye on that. And then, lastly, we're just seeing that people know that gold has been underpriced for some time, but they haven't seen any urgency to get in. But as you and I talked about earlier, see some of these $500,000 sales we've had here in the last couple of weeks, and 100,000 plus sales has really picked up tremendously, and we think that's going to continue as people move for a bigger percentage in gold. And certainly we'll talk about the other metals as we go through. But right now, the last thing to say is we are still getting a lot of inquiry about cryptocurrencies backed by gold coming, and that certainly I think will happen in 2019. And people have to buy the gold to put into a COMEX warehouse to issue whatever kind of gold tokens they're going to issue. So we're really excited about that, and we're talking to several companies about storing their gold cryptos. So I can tell you firsthand that they are in development. I can't tell you how far away they are, but my little company is certainly looking at being one of the storage companies for these ETFs backed by gold.
That's very interesting. I look forward to more updates on that. Now, it seems, Tom, like what we've seen here is we've seen some readjustments in the minds of market participants about the trajectory of the economy. I mean, we're seeing that certainly with the interest rates, the 10-year yield, the 30-year yield, both really pulling back from where they had been over the last couple of months. And that, of course, is negative in this environment, even though it would seem positive. The rate at which we're seeing them decelerate indicates to me, and I may be wrong, I'm curious on your thoughts, but to me, from when I've seen this before, it indicates pretty much a lack of trust in the market participants that the economy is actually growing at the rate that the government is saying. Now, you and I have been talking for years about how the government puts out funny numbers. And here we have an example of this where the market does not believe what the U.S. government is saying about the economic growth. Who's right?
Well, we know the numbers have always been fudged, and when you hear, the one that just kills me is when you hear Trump or Obama or Bush, any of them, say, yeah, we're cutting the deficit, and yet you go and you look at any website, usdebtclock.org or any of them, and you see us flying up at astronomicals. And the reason is, the numbers get so big, Jerry, when they go up a smaller percent, it's still a bigger deficit. And, they twist the language. But I've had people I've talked to recently say, yeah, but finally the budget's going down. I said, what are you looking at? The budget deficit is not going down, it's skyrocketing. It may be growing at a slightly smaller percentage, but the number's bigger. And those are kind of mistrust numbers, and those are very important to people worldwide because they know gold can't be printed out of thin air, and they know that when you look at it right now with less than 1% of the world's investing money in gold, when historically it's been up 3 or 4%.
Really?
And a high back in 1980 of 5% of all the investable money. But right now we're at like 3 of 1%. So it's just a buy. And all we've been looking at is just like we talked about earlier, is breaking through these numbers to where you get the next jump. And, 1238 won't be the number that it's breaking through. And I just feel sure that any time in my 42 years that 2019 and 2020 are going to be great years for not only gold but the other precious metals.
You're listening to the voice of Tom Cloud. He is a precious metals advisor. He's been one of our primary sponsors here for many, many years. It's great to have him on the line talking about what's going on right now in the precious metals markets. So going back to the economy for a minute, Tom, and some of the fundamental data points we've been looking at. I mean, first of all, you have layoffs happening for sure here in the United States. You have General Motors saying that it's decided to slash thousands of U.S. jobs while the U.S. economy is still good, instead of waiting for the next inevitable economic downturn, which is, quite frankly, a stinging indictment of the devastating boom-bust economic cycles that these central banking schemes have wreaked upon, modernity for that matter. But then on top of that, we have stories that real estate in the United States right now, U.S. real estate, is far weaker than many people could imagine. It's been propped up by a lot of unsustainable borrowing. We actually have right now, we're seeing a slowdown in buying of real estate because the rates keep going up. And then, of course, we also have the Fed still planning on raising rates in December, so we still have that coming up. And then we also have another data point here of Chinese conglomerates that have been liquidating many of their largest U.S. real estate holdings in recent months as Beijing puts pressure upon them in the middle of this trade war. You have U.S. crude oil prices, Tom, that have been in free fall. You have GDP growth across the globe, whether it's Germany, Japan, China, whatever, going down. I mean, we have some contracting global GDP growth. U.S. GDP growth is expected to slow in the coming quarters. You have the yield curve that's starting to flatten. I mean, you have all of these different things going on. And like you said, money managers have less than 1% in gold. It just doesn't seem to match.
Yeah, it doesn't match, Jerry, and everything you said is just accelerating, and yet people are thinking happy days are here because they look at their situation and not the whole situation. Just because they may have got a nice raise in their job, there's 300 million other people that didn't. So you look at it, and now more than ever, you've got to look at the numbers and stay tuned in to people like you and me that are doing this every day and have for years, and just look and realize when it does move, especially in the markets that I deal in, when they move, next time they're going to be all these commitment of traders are going to get out of short positions and go in long positions. All you got to do is look at silver from 2000 to 2011 when J.P. Morgan was long, and we saw silver go from $3 and something to 48. 16 times. And now we've got silver all the way back down below mining cost, which has only happened 3 times in my 42-year career. And, it's just crazy when you can buy silver at $1 below mining cost. And we know that it's not going to stay there long because the mines would have to close. They can't run at a loss of $1 an ounce they're bringing out of the ground. And the opportunities in silver, even though it has been a bad year, and I was wrong about silver in 2018. I'll be the first to admit it, but we don't bat 1,000. But I can tell you right now, I would bet in 2019 silver, because it's down 14% this year. Gold's down like 4.5%, but silver's down like 14%. It's just an incredible screaming buy, as is platinum. And we'll talk about that in a minute when we get to palladium because they're running coexistent. But right now, your audience needs to be looking and getting a percentage that they want in their tangible assets in gold and silver, and certainly platinum, and we need to slow down in palladium for several reasons.
Yeah, looking at the silver chart, Tom, we have seen a real nice consolidation in silver after it kind of really bottomed near that long multi-year support level of $13.90. That's been a really key area, and it has held that like a champ since coming down to 14 back in September. And now it's just flatlining straight across. But we noticed a little bit of pickup over the last several sessions. If it can break out technically, just from a technical perspective here, if we can get a breakout above $15, That'll be the first time we've had that since August, and that could really poise us for another big bull rally. And I tell you what, I mean, as you mentioned gold and silver, I know many of the folks who are listening to this podcast are huge silver fans. They know that silver, as you've pointed out over the years, will soon be depleted from the Earth's crust. It doesn't mean they can't recycle it. It doesn't mean they can't come up with some other technology. But nevertheless, just the sheer silver in the ground. I mean, this is a real story. That quite an opportunity for people who are able to take advantage of the next uptrend in silver. We're going to be watching that one closely.
Yeah, it is. It's unbelievable, Jerry. I just can't tell people enough. They need to be buying their children, their grandchildren, themselves, anything you can get into silver, because I won't be wrong on this one. I may have been wrong this year, 2018, but with the solar panels and the Earth's crust, all the silver being depleted, the cost skyrocketing, and the mining cost, we've seen it go from 12 and a quarter to over 15.50 in just about 2.5 years as these deposits are deeper and harder and more expensive to get. And it's just an exciting time to be adding, silver to your portfolio when there's no risk. When it gets to 30 and 40, and everybody in their, everybody's going to be wanting silver then, and the premiums are going to be higher as well as the price. And now you can buy while premiums are extremely reasonable. So, listeners need to give us a call and discuss it with Dan or Kathleen or I, what we have available and what we have the best deal on that day.
So I know that gold, or you had mentioned recently that gold was trading below mining costs for some mining outfits. What about silver? Is that the same case there with silver?
No, silver's the one that's mainly below it. Gold's average is about $12.04 that just came out.
Okay.
So gold's within about $30, but it's still a profit. But silver, if you look at the quarterly reports out by the big miners at the end of September, the average on the 10 biggest was $15.56.
Oh gosh.
So it's about $1 below silver mining cost. But no, gold has a slight $12.04 right now, the average mining cost.
Let's move over to palladium and platinum. We did a show a few weeks back about platinum and how it was really due for a rally. It had come down pretty good, and it was really flatlining and began to break out. And then also palladium. Maybe we'll start with palladium. Palladium, we told our members, and this is just a good note for those of you who are not members. If you want to become a member, we provide alerts on gold, silver, palladium, and platinum, along with many other commodities. And we called a new uptrend in palladium for all of our members back in July of 2016. And if you had bought whenever our uptrend alert was issued to our members back in July of 2016, you would now be up nearly 90%. Tom, palladium is on a tear, and platinum is also doing well. We have it on our we recently had it in our one of our uptrend alerts, but it's kind of been staggering a little bit. Give us an update on what's happening between palladium and platinum.
Well, historically they go opposite directions, really, because the primary use is for the catalytic converter and cars all over the world. As we see demand for cars picking up in places like China, certainly they're taking platinum or palladium, whatever they're using, because even though they have a different melting point, they can both be used for that purpose. There's a lot of new purposes we've been over on this show with platinum. Be happy to share that with people that call us. But right now, we see today palladium going higher than gold for the first time in history. It's mind-boggling.
Wow.
Mind-boggling to think that this little metal that is primarily tied to catalytic converter for the Clean Air Bill of 1980, when it all started, and about 90% of it coming out of Siberia and Russia. You can't mine it but about 6 to 8 months a year. So and part of it does come from South Africa, but the major part is the Soviet Union. But we just see now that the car manufacturers, are right on the verge of switching back. And if you're still holding palladium, we gave a sell signal back at 1100, now it's at 1255. I would sell the palladium and buy the platinum. It's going to do the same thing. And that uptrend that you gave in bicycle in 16, we had given one a few months earlier, and our clients have now over doubled their money just in 2.5 years in that palladium buy signal that we gave. And I feel the same will happen in the platinum buy signal that we gave just a few weeks ago. And even though you said it hasn't moved yet, to me it's a great time to, if you have palladium, sell the palladium, buy the platinum. If you own neither one of them, buy platinum now, because once the catalytic converter, some of these major manufacturers start going back to platinum instead of palladium, you're going to see the price move quickly. And remember, most of the last 30 years, platinum has been higher than gold. And right now it's like $400 less per ounce than gold. It's crazy. So it is an area, and I don't think I mentioned, but palladium's up 22% this year. And we think platinum will just be doing the same thing next year that palladium has done this year. And palladium could go a little higher till it peaks out, because we've seen no major announcements from any car companies saying they're changing their production to use platinum instead of palladium in the auto catalyst.
Which eventually they will, right? I mean, because at some point it just doesn't make sense to be using palladium when it's $1,200 an ounce versus platinum when it's reasonably priced at $800.
Yeah, at $800, yeah.
Yeah. Right. So on the chart, by the way, just a reminder for our members and for our listeners, platinum really has very key support between 750 and 800, and it's been holding well above that area ever since we made the call. So it certainly is still within striking distance of a really good potential uptrend there. We're watching closely. Any final comments, Tom? Anything else you want to share with our members before we bring this to a close?
Yeah, I just ask them all to do their homework and get the percentage they want in gold and silver, platinum, palladium, and get it, because I can tell you, it's one of those feelings from doing something as long as I have that, the premiums are going to jump next year, the price is going to jump. We're going to see people on the commitment of traders going off of shorts and going into long positions they haven't been in. I'm not talking about just J.P. Morgan, and yet we're going to see the trader at J.P. Morgan that manipulated the market be sentenced on December 6th. 15th, I think it is. But we're seeing a lot of things that's going to be very positive for metals, in addition to all the things we mentioned today. But one thing for sure, the central banks they're not slowing up. They're going to keep pouring money into gold, because, as I said, they know economic troubles are ahead, and they know that the cure for that, part of the cure is going to be gold. And in what capacity, we don't know, but we know it's going to be part of the problem solving is going to be gold when that happens. So do your homework, and certainly do not believe the U.S. numbers that you're seeing. If you do, you're going to make a crucial mistake. Stay in the stock market. We're not saying get out. We're just saying be more cautious than you've ever been, and watch all the things that Jerry mentioned earlier.
In our final moments, Tom, we have a lot of new listeners from all over the world, and as usual, I mean, our podcast continues just to pick up new listeners, and many of them have not heard you before, Tom. So for those who are new to you and new to what you do, would you share with them exactly how they could contact you, what that process is like if they actually want to own physical metal?
All they need to do is call us at 800-247-2812. That's 800-247-2812, and we'll talk them through all the questions. And certainly, if they're not on our alert here, they can sign up through FTM Daily /gold, or go to my page at FTM Daily. And we don't share your email with anyone, so you need to get on that if you're not, already on that. And what we do, Jerry, we give all your clients free shipping, not only for the first order, but for every order after that. We're the lowest storage company in the world. Just think about that. One little company, we have the lowest storage fees for people that want to leave them in a COMEX warehouse and not take delivery, especially larger purchasers of silver. And, Jerry, everything we do has commissions below 3%. And we don't charge any back-end fees. So there's nobody that has the round-trip pricing that we have, the lowest storage in the world, and the availability of some of the top wholesalers in the world. We're always trying to find great deals for our clients because wholesalers that put out bids have to buy things, and sometimes they get hit for a lot more than they want to hold, so they'll call me up and say, we've got 3,000 British sovereigns. We're going to give you a 2% discount, which is unheard of in the gold industry to get that big a discount on a product. So we're always looking for products to help our clients get a head start on the market. So just give us a call at 800-247-2812, and I think you'll find all of us here very friendly and helpful.
Tom, I really appreciate your insights. 40-plus years in the business. I'd say that counts for something as he's looking at the markets and providing insights to our listeners and members. Tom, I really appreciate you, my friend. Have a very happy holiday season there, and we'll look forward to talking to you again real soon.
Same to you, Jerry, you, your listeners, and your family.
God bless you, my friend.
God bless you.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years' experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
Drug addicts and drug dealers. But you start to follow the money, and you don't know where it's going to take you.
All right, friends, welcome back to the program. Welcome back to Follow the Money Radio. We are in the final moments now of our podcast, and as always, I like to leave you with a final word, this time taken from the book of Genesis, chapter 13, verse 2, where the Bible says, Now Abraham, who was going to become Abraham, Abram was very rich in livestock, in silver, and in gold. Isn't it interesting that as we look back through time, silver and gold have long been viewed as assets worthy of holding. In fact, many people have held their wealth in the form of silver and gold for many, many millennia. So it's not just recently that people are owning gold, but it's been that way for a long time. And it's interesting that even central banks, who no one would think of as antiquated type of structures or antiquated types of institutions. These are institutions that are on the cutting edge, supposedly. They are using fractional reserve banking, they're using paper money, and they're using all of these sophisticated tools, and nevertheless, look at where they put their money. They put their money in the safest store of value that they can find, and that is gold. So gold has long been money. It doesn't matter whether you turn to the Bible and see that, or if you just look at the pages of history. Gold is an asset class that deserves to be, I believe, personally, in most people's portfolio. Now, I'm not a portfolio manager. I'm not a financial advisor or an investment advisor any longer, so I don't give advice. But I will tell you what I do. I keep 15% of my total investable assets in precious metals, gold, silver, palladium, and platinum. If you're thinking about exposing some of your assets or some of your own portfolio to precious metals, one of the easiest ways to do that is to contact our friend Tom Cloud, 800-247-2812, and he might be able to give you some good advice. What I like about Tom is that when you call him, he'll tell you whether or not, it's a good idea for you. He has, a lot of experience, and he'll help you decide, should you own all silver, or should you own a little bit of gold and a little bit of silver, or maybe platinum, palladium, whether you're a speculator or whether you're a long-term investor, whatever you're investing for or trading for, he can help you. So again, I would encourage you to reach out to Tom Cloud if you have any questions on gold and silver. And I would also point you to our memberships as well, because we provide uptrend alerts on these metals, not just these metals, but many other commodities as well. So if you're looking for a good time to add a particular commodity, we look at the technical charts, we look at the technical indicators, and are able to determine when a breakout is occurring, when it might be a advantageous time to begin acquiring or adding to an existing position. So just some things to think about there. God bless you, my friends. It really is great to have you on the podcast today. And as always, remember, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussion on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.